Hi folks, Scott here, and this is the wrap for Thursday, August 8th. So this is a backtesting workspace that I use with TradeStation. Well, these are 5-minute charts for multiple days, about the past 10 days. You can see right here. And this is today's action relative to its opening price, yesterday's high, yesterday's close, yesterday's open, which is that little gray line. The close is the blue line, and yesterday's low, red line. So the blue is gap fill area, and clearly you can see we had a sizable gap up today that closed the gap without taking any heat, and then reversed and finished very strong. What's unusual about today is the size of the gap that filled. Just by definition, in general, any gap larger than 40% of the 5-day average true range only has about a 50% historical odds of filling. Today the odds were actually a little bit worse for reasons I'll show you in just a moment, but basically it has to do with the fact we've had some recent weakness. Secondly, we closed more than 40% of the 5-day ATR above yesterday's close. The current 5-day ATR, let's see, we use the cash index. It's down to less than 11, so 40% would be anything more than 4 points, and we certainly closed, looks like 5 or 6 points above. So definitely opened above and closed more than that critical 40% level. So what I want to show you the results are for fading gaps after this somewhat unusual pattern. That is specifically opening and closing more than 40% of the 5-day ATR above the prior day's close, while also filling that gap intraday, which is what we did today. And I've added the additional filter, which is what I almost do, of ensuring that it must have been above the 200-day moving average. And there you go. It's only happened 15 times since roughly 2002, past 11 years. So you can't read too much into this, unfortunately, other than, I guess, it attests to the unusual market conditions themselves. Because quite frankly, I would have guessed we had 3 or 4 times more number of instances than this. Secondly, you can tell that odds favor a gap down. Again, small sample size, but so distorted, there's probably a slight edge for a gap down tomorrow. Now, as always, I will defer to our gap guides before making my final decision tomorrow. And in fact, these numbers here use an end of day stop, so I'll rerun these numbers for our members in the morning just to see what it looks like on a gap down, if it's volatile or not. And our final decision for me is always based upon our gap guides. So anyhow, I thought this was an interesting nugget to point out, and not sure exactly what it means, but the market's starting to get a little bit choppy here. So should be an interesting rest of the month. All right, let's get into, let's see, today's gap specifically. Let me show you my worksheet, which summarizes our 8 individual indices gap guides. And by gapping above yesterday's highs, it was only a 46% chance of being a winning gap fill today using our MTG stop parameters. I use 30% of the 5-day average true range in all my back testing, and in the overwhelming majority of my actual gap trades. In fact, that's always my starting point. I may tweak it a tick or two, normally not much more. And the PF is profit factor, and that means it's a ratio of historical profits to losses. Anything less than 1 is lost money, which that was the case going into today. So the average across all 8 indices, which is where I take my number 1 key, did not look good. In fact, that's a pretty easy pass. Now, what was interesting, we could have opened inside of yesterday's highs, and that would have been a little bit better setup, but it was a small window of opportunity, and we really weren't that close to doing it today. So this was a pretty easy one for me to pass on. Now, what was also interesting was the number of unique patterns in play. I think this is the second time now in 7 or 8 months of this version of the worksheet being available that we've had all of these rows filled. That means 5 different patterns. And we had a couple big positives. Following an unfilled down gap, up gaps, historically very strong numbers, made twice as much in profits as losses. After a false up day, that's when you close down, but with the green candlestick, really strong numbers on somewhat small sample size, but still together these are really strong numbers here. And then we had a weak consideration. Doji was a concern here, and following a doji after being closing below the 10-day moving average. Down straddle neutral, hammer candlestick neutral. So a little bit mixed. You can see read the definitions there if you're interested. And as I summed it up, my pre-market comments, see, this was a positive last night's unique pattern I showed in the video. August in general, slightly attractive. So overall, weak guides. The other factors, the unique pattern and daily factors, were positive, however, for fading up gaps. And to me, that just cancels out. Just a dead neutral setup means a strong cross currents in each direction. And as I said here, I'd normally be thinking about a follow the gap scenario, except for these positive factors, the unique factors that were in play. And sure enough, they kicked in and these gaps filled, and I missed. Technically, I would call this a miss. I missed a winning gap fade, which is always okay, not enjoyable, but you got to get used to it if you could be a probability-based trader or any type of a serious professional trader, because it's better to miss a winner than catch a loser. And I just don't trade the marginal setups. Today was a marginal setup. Yes, it would have made a lot of money. Yes, it took very little heat, but it happens. You can't predict every scenario perfectly. It's impossible. So I stood aside of the open, and I've already showed you what it looked like. Here's a close-up on the 5-minute charts. I mean, it was just beautiful. Now, I was out of the office most of the day, so I didn't miss anything as it turned out. I did check on the guides, and there's no way I would have been able to trade any of them, but none of them looked compelling. And I checked our trading room. It didn't look like many people took the range setup. Some did, as always, because it depends on your rules. But for the most part, there were some positive elements of these 15-minute, which are the pink lines here, and the first hour guides, but not enough that I would have taken them. None of them met my criteria today, so it would have been a quiet day. I would have missed it here, and missed this action as well. It's just the strong cross currents. You saw it in action there. Pretty unusual. So anyhow, that was my day. It was a quiet day, and we'll see what tomorrow brings us. It's Friday, so I'm looking forward to that, and often we'll get good setups on Friday, so let's hope we get one tomorrow. And that is the wrap for Thursday, August 8th. Have a good one.